about a social media roller coaster. And one of the scary things with roller coasters is that first dip. And in some cases, we can think about that in this space as an explosion. There's been an explosion in the social media space. In fact, I like to call that the Cambrian explosion, the Cambrian explosion. And this is what's happening in the social business space. There's thousands of technology vendors, consultants, millions of different deployments that are happening, and a lot of content and data that's happening. Now, this is very innovative because we're seeing all of these different types of deployments happening. And look at the variation of species. But we don't know which ones are going to mature. Now, you as investors need to make sure that you avoid the trilobites. You don't want to invest in this ugly character, because this character never grew. They never arrived because they were point products. They didn't change with the ecosystem. Now, my mission today is to teach you how to find out which are the organisms in which you should be investing in. But you must first understand the social business ecosystem. It's a complicated space, phyla, class, family, species. And I'm here to break it down for you. So when you walk out of this room, you have a clear understanding of the social business space. So in front of you is a research report we just published last week, and I used to publish a lot of reports at Forrester Research. So research is my core. I have a team of researchers that work with me. Analysis is what we do. And this report has the 2011 forecast data on how people will spend and what happened in the prior years. I'll talk about it briefly, but that's for you to take back, and the slides will be available, and we can send you the report if you require more copies. So, just to give you some example on scope, I'm not here to talk about Facebook valuation. I'm here to tell you about how corporations will spend on social business. That is my primary focus as an industry analyst, on social business. And right now, what I see as the future is corporations will invest in what's called the social business stack. And I'm going to walk you through what this particular ecosystem looks like. Now, it's important that you purchase, invest, partner with companies that support this stack, but are not trilobites, just point products that will disappear on the roller coaster ride. So I'm here to tell you three things. Number one, what is the social business stack? And that's the ecosystem that's going to form out of this explosion. Number two, I'm going to teach you about the forecast data in 2011. Who is going to spend what, when, and how? I'm going to give you real numbers based upon buyer data. It's in the report. And number three, I'm going to give you 5 recommendations on growth opportunities for you to consider in your portfolios. Let's get started. So, the social business stack. Look at all these different people. Everybody's different. Each 220 of you are all very different. And we're seeing all of these things grow in the social space. All these individual companies are emerging. Well, there's a challenge, though, in the social business space. As Bob talked about, this roller coaster, we get so excited with all these social media technologies. We see one company invest in a Twitter management system, then we need one, and then the next investor says we need that too. And then what happens? We have funded the clones. So this space is interesting because there's low barriers to entry. A lot of innovation during a recession. A lot of people got laid off. So I live in Silicon Valley, and in the first bust, when people got laid off, the number one thing they went to do is become a real estate agent. Now, in this recession in the Valley, the number one thing have become our social media consultants. So this is the second wave that we're seeing. So it's a natural thing to do because you'll be at home on your computer using these tools, and innovation spurs out of this. And it's very low starting cost. In fact, Guy Kawasaki started his company, Trumers, for $11,500. And he's able to fund a startup. And he gave his case study how he's able to do that. It doesn't cost a lot to start these companies. And there's a lot of rapid iteration. Because a lot of this code is available, people snag it, and they build it, and they build on top of it. So that's why we see so many clones. Now, the downside with this innovation is There's thousands of these clones out there in this ecosystem. And they're just copying each other, and they're moving at such a fast pace. It's very difficult for me as an analyst, an industry analyst, to even try to track these thousands of vendors. It's a major challenge for me. So I can't wait for this space to start to mature. So what should we do? Well, I took those thousands of vendors, and I tried to segment them into an organized way. And I found that this is what emerged. This is the social business stack. And I'm going to walk you through all of these pieces, and you'll get the presentation so you can take it back. And in summary, there's 7 major categories. And then there's 18 specific types of companies that you can invest in inside of this stack. Let me walk you through it. This is our ecosystem. So at the very top, this is the social networks. Facebook, LinkedIn, Twitter, Zynga, Mixi in Japan, Tencent QQ in China. The list goes on and on and on. These are emerging at a rapid pace. And you can tell by this diagram that there's so many different ones because you can see the different dots out there. And more of them will appear over time. Now, there's not a lot to tell you about here because often these are privately owned and there's not a lot of investments that you can make directly unless you have the right relationships. But what we do see is that corporations, and this is all from the corporate buyer's perspective, the marketing or support department that's going to purchase the software, they need to purchase everything in this stack. So they need to be present where customers are, and I'm going to walk you through all of these pieces. So moving forward, this next space is called the monitoring and analytics category. And there's 2 types of companies to invest in this space. Let me break it down for you. Now, imagine you're in your corporate marketing department and customers are talking about you in the social web. You need to understand what they're saying, the sentiment of what they're saying, and the share of voice that they're saying it in competition of the share of voice with your competitors. So these tools are very important to understand what's being said. I'm going to back up a slide. And you can see that social networks is this large thing on the top, and this is sort of a funnel. The monitoring and analytics is a funnel to understand what's being said from the social networks. So this is cascading the content back to the corporation, the corporate buyer. Now, let me tell you about these vendors. It's a mess. It is completely saturated. There are 150 brand monitoring companies, according to Ernst & Young, today. Low barriers to entry, all those things we talked about, easy to deploy, commodity technologies. It's a very confusing space. The ones that do come up a lot, Radian6, Alterian, who made their acquisition, Scout Labs, who was acquired by Lithium Technologies in Emeryville, Visible Technologies, Symphony. These ones come up more often in the corporate space. So we're already seeing a dominant enterprise path emerge out of these particular vendors. So what's happening when you see a large space like this is I start to see the verticalization. So there's a brand monitoring company for autos, retail, financial, because they weren't able to make the large cut for the enterprise side, so we're go down the verticals. That's very common in the social business space. If they can't make the tier 1, then they start to go down the vertical lines. Now, that's a saturated space, and that might be an area towards later stage investment. I'm going to show you the deal sizes midway through the presentation, so you see actual numbers on how much companies are spending for this particular space. Now, the second category in this funnel is an emerging area, and this is what we call social media analytics. Now, the first segment says, what are customers saying about us and how often? This category actually says, why are they saying it and what should I do? This is sentiment analysis, this is understanding the nuances of people, and this is the early pinnings of the semantic web. This is understanding why do people say things. A few vendors we've been talking to, Crimson Hexagon, NetBase, which I forgot to include on here, Crowd Factory, and I'm seeing the incumbent BI, business intelligence firms, start to make their acquisitions. SAS made an acquisition in the space, Oracle, SAP, ClickView are starting to come around. So Saturated space, ready for later stage investment in brand monitoring. Nascent, early space, just emerging in social analytics. I'll take questions once I go through the stack, so we can take this in different stages. Okay, let's take a look at the next class. Now, look at this arrow. It's going from the social networking box at the very top, and it's funneling it down into this area we call aggregation. And aggregation is very important, because what's happened is, well, let me ask you, did you watch the Super Bowl? A lot of the ads were pointing to facebook.com/brand, facebook.com/GoDaddy, facebook.com/Macy's or Coke. So many companies are investing, they're in sending their customers to social networks, and they've created an imbalance with their corporate website. So as a result, what we're going to see this year is companies are going to try to integrate social networks on their corporate website. I have data to back that up. So this is an important category. I think this is one of the most important areas to look at for 2011 is aggregation. And it breaks down into 3 areas. Number 1 is the social inbox aggregation. So if you watch the Super Bowl right before the halftime show, we saw Salesforce's chatter ads emerge. That's an example of this category happening, where you're integrating all of the social web right back to your inbox. That's what Chatter does, social text, Gist, and others. Actually, Gist just got acquired yesterday. So we're seeing this space heat up. Next is what we call identity brokers. They're managing the 20 or 30 different social networks, all the profiles, and connecting them back to one system. Now, if you have an IT background, you might have heard of single sign-on. Anybody familiar with that concept? LDAP, single sign-on? So what's happening now is it's social sign-on. If you log into a corporate website, now you can use your Facebook, LinkedIn, Twitter ID. So these vendors, Gigya and Janrain, are helping to broker all of those relationships like a router. A lot of growth. And then the third category is what we call the aggregation and curation solutions. So Discus, Echo had a major event announcing new products last week, and we're seeing a variety of areas. I'm putting my research investments towards this space later this year. So this is an example of that social web being aggregated back to the corporate properties. Now take a look. You'll notice that this is congruent. So aggregation on the left, that's a brother, and its sister, you can see these fit well together, is publication. And you can see that line points back up to the social networks, creating a loop. So social networks get aggregated down to the left to aggregation, and then the sister technology is the publication tools. And these tools are not married yet, but I know what's going to happen in this space. I'm going to see those 2 lines merge together. It hasn't happened yet. So the publication, let's break that down. Well, anybody who's created Facebook applications in Facebook has done this particular thing. In fact, there's over 4,000 developers I saw at last year's Facebook conference. There are so many people, and we're already starting to see networks emerge out of that. Zynga, for example, is a gaming network that was built initially on the Facebook platform, and now it's becoming a standalone company. You've heard of Farmville or Cityville. This next category, I think, is ripe for early stage investment, and this is the social media management systems. Now, if you've heard of CMS or WMS, the software used to run your corporate website, these tools are here to manage your social media accounts. You're probably wondering, Jeremiah, how important is that? Well, let's just imagine you're the Hyatt, and Hyatt has maybe 10 brands in their portfolio. And some of their brands may have 4,000 hotels, and each hotel has 10 different social media accounts with potential turnover of the property manager. How will you possibly manage 10,000 social media accounts and glean that intelligence back and be able to control the content that goes out? So this spot, SMMS, Social Media Management Systems, I coined that category, and I started the list in March last year. Within that span of time, it's been just 10 months, there's 28 vendors already. So that, if I could invest, I can't for obvious reasons as an analyst, I would be looking at this particular area. I see this as a growth area. And next, there's sharing tools, this third category, where you can just share content. There's not a lot of money here. Okay, moving down, this particular center part is the software stack. I'm almost done, and then we'll look at the side pieces, and then I'll open it up for some questions. So this is the social platform space. And out of all of these areas, this is the one that is the most mature and has the most recurring software revenues and service revenues. Let's break it down. There's actually 6 particular ways I break this down. At the top is what's called community platforms. And when I coined that category when I was at Forrester, there was 125 vendors. Only about 10 of them matter now for the enterprise. So the ones you might be hearing about often are Lithium and Jive. Jive just hired CEO Tony Zingali, and who has been on the record saying they want to have an IPO event this year. That's new. We don't hear about that often. LinkedIn had theirs. So from the social business space, this is an indicator, a bellwether of this particular category. So there's some of the vendors that I see in the enterprise space: Awareness, Mazinga, Jive, Telligent, Engage Networks, KickApps, Pluck. KickApps was just acquired 2 weeks ago. Pluck, Lithium, and LiveWorld. So these are what you call white label social networks, where you can build your own community on the HP site or the Intel site or the Microsoft site. The next category is what we call the collaboration platforms. And the dominant player here, the incumbents, are Microsoft SharePoint, IBM Lotus, SAP, and Oracle. But yet we're seeing new vendors that have emerged in the last few years. Atlassian, Social Text, PBWorks, and Broadvision, which is basically incumbent, has jumped into the space as well. The third level is the enterprise microblogging platform. So Socialcast, Yammer, Social Text, Salesforce Chatter, NewsGator have emerged in this space as lightweight deployments, which are often sit on top of the collaboration platforms. Then we saw the blogging platforms. This space we haven't seen a lot of activity. There's not a lot to do here. Innovation platforms. So imagine a company wants to build better products with their customers in a collaborative way. That's a new thing. This is starting to emerge. We're seeing Salesforce Ideas, User Voice, IdeaStorm, and white label versions like Plig emerge. That's innovation software. And then finally, a new entrant into the space is what we call social commerce platforms. So imagine merging e-commerce with social technologies, and the leader in the space is Bazaar Voice. Another one is Zuberance out of San Carlos. Bazaar Voice has very healthy revenue flow, recurring software license, ShopIgniter, Wildfire. So this category, social platforms, has recurring revenues, and I'll walk you through the deal sizes in a bit. This is a mature area of the stack. Okay, 2 last pieces. Now notice this is the infrastructure stack. This is the data that's running up and down the software stack. And you can see it's connected. It's hard to see in the back of the room. It's connected to each of those pieces on the stack. And there's data to be gleaned and vendors in the space that are gathering this information. For example, there are vendors that are emerging, about 10 of them, that are trying to get all of your personal information, believe it or not. But guess what? We've been emitting it in public anyways, so they're just collecting it. So Reportive, Gist, Clout, Rapleaf, Google, Facebook, they're trying to aggregate all of that personal information about you. And you can use it in a variety of ways for marketing or support or retargeting or advertising. This is very valuable data. In fact, think about it. Let me ask you a question. Who do you think has more information about Generation Y in the United States? Facebook or the United States government? It's probably Facebook. Although we could argue if the Patriot Act went into effect that they could certainly glean it. But the thing is, information is all opt-in into social networks, and all that data is present there. The next area is called social CRM. And this isn't a product. Don't let anybody fool you. Some people are claiming to be social CRM vendors. It's a style of deployment. It basically means gluing together the social data with your existing CRM applications. And the end result of this social CRM is you can predict what customers are going to do. You can anticipate what type of room you'd want here at the Hyatt based upon your previous information you put online. Okay, and then the last category on the far right is the social business services play. And it runs up and down the stack because there's services across the entire stack. And there's agencies that have emerged, there's boutique agencies. Then we've seen the incumbent agencies like Edelman and Ogilvy put down a lot of investment towards social business. Then we're seeing new types of management consultant firms such as Dachis Group, which is backed by Austin Ventures. They've done, how many did they do? They've done 7 acquisitions in 13 months. That's amazing. And there are almost 200 people, I believe, out of Austin Ventures funds them. Then we're seeing new incumbents like AnsiView. These 2 players are going to try to take on management consulting firms like Deloitte, McKinsey, Accenture, Bain. This is the next set that understands social business. And then we're seeing other types of blogger networks. Let's look at point number 2. And the report that's in front of you, which is how corporations will spend on social business, will mirror this data, but I'll break down just some of the highlights for you today. The 2011 Social Business Forecast. Now, this is important to note. Social business programs, so companies that have adopted social media in their businesses, have only been around for 2 years. Friends, this is so early. This is an early market. Although out of those respondents, out of this data set, which is 140 corporations, the business buyers, global national corporations with employee sizes of over 1,000 people. Many of them said their programs were actually formalized, so they're starting to put down small amounts of money in their budgets towards social business. Now, one key trend, and you'll see this in the report, is 2011 is the year of integration. So all those companies that have sent their Super Bowl traffic to Mark Zuckerberg on Facebook.com/brand are realizing that their corporate websites are out of balance. Why would you send traffic to Mark Zuckerberg when we can send it? We've been sending it to our corporate website for the last 10 years. So the investment balances have been off, and we're going to see that start to course correct in the market this year. Now, I asked these business buyers and these large corporations, what are your internal goals for 2011? And the number one thing they told me is, we don't know how to measure this confusing thing. So creating ROI measurements was the number one priority for half of the respondents. So when you're thinking about your investments in your portfolio, make sure that the investments that you're working on are matched to these particular needs within the business. Number 2 was developing internal education and training. Number 3, aligning social insights to the product roadmap. So do you remember that category I showed you around social innovation, improving products? That was the 3rd most important thing companies said internally that they were going to work on. And then the next set of things actually are a little bit aligned towards change management. There's not a lot of investments that you can have on the software side. This is probably going to be a services play for a majority of the other items. That's the internal goals. Now I'm going to flip it over and I'm going to show you the go-to-market, the external goals that corporations said they will focus on in social business. Number 1, this is why social integration is the key for 2011, is because the buyers admitted this, that website integration will be the core practice for 2011. They're tired of sending that traffic to Mark Zuckerberg. They want to bring the social networks back to their own corporate website. That's why when I told you the aggregation piece is going to be very important in 2011. Remember that category in the stack? This is matching with the data. The next one is developing an ongoing dialogue with customers. So being there to listen and brand monitoring software, and then putting the staff next to it so you can communicate with them. 3rd, listening and learning from customers. Again, brand monitoring. It's another important play. And we see fostering word of mouth and advocacy programs. Social commerce comes into play here. This slide here is the adoption rates of these business programs within corporations. I'll walk you through it. The blue line is the adoption rates of these technologies and programs and software and services in 2010. The orange line is the growth rate in 2011. Now, just in aggregate, it's about single-digit growth across all of these items. I'll break it down for you. The number one thing corporations will spend on, 82% in 2011 will spend money on brand monitoring. With this data, I'm going to show you the deal sizes next. You can figure out market caps and total market addressable markets. Number two is training the corporation. There's not a lot of money to invest here. 3, staff, same story. Number 4, you're wondering, how did Facebook get $50 billion valuation? Well, a part of that story is because 75% of corporations said they're going to spend advertising on social networks. I'll show you the deal sizes. It doesn't quite add up completely in the math, but we can see why this is starting to happen and the budgets are shifting over to social networks. Next is research and development. And then we see like SMMS, which is a category I told you about, has a decent penetration, 58% penetration within the enterprise. Social CRM, still very nascent, early term, is very towards the bottom. So that's adoption rates. It's in the report. Next, let's look at the deal sizes. Now, this is the amount of money that corporations will spend on per year per each of these programs. And when you add it all up, it's tiny. In fact, average is $833K. It's very, very small. But we're in year 2. And if you remember the internet in 1997, it's like that again. This is early. So number 1, same stories with the graphs. 2010 is blue, 2011 is red, orange. So staff, they're going to staff up, increasing the amount of people in their company to manage these programs. That, of course, is the bellwether, the precursor to rolling out programs. You need headcount to manage them. Number 2, 160K, they said they will spend on advertising in social networks, the second largest line item. Number 3, community software platforms. I walked you through some of those vendors. The average deal size is 130K. That's per year, and that's average, so more advanced corporations will spend more. Then we saw agencies, boutique agencies, and then brand monitoring, which is a software play, 100K. Then we're starting to see some custom technology development. This basically means integration and customization, about $90,000 per corporation. Influencer programs, research, social CRM, training, and social media management systems is very small. But this is month 10 for social media management systems, so the deal sizes should be small. I saw the same story unfold with community platforms 5 years ago. So this is the deal sizes. Now I'll break it down in a way what we sort it by maturity. Let me go forward to that. So this helps us to understand what's the future beyond 1 year. So what I did is I asked the respondents, are you a beginner, intermediate, and advanced? And tell me your spending categories. So here's what I've sorted the same data that you just saw, but I'll give it to you in a storyline so you can see where the money is going to be. This is a future look, and the report in front of you has this in detail. So number 1, companies that said they were beginner, which is about a quarter of the respondents, said this is how they spend: staffing, community software, traditional agencies, brand monitoring, typically software solutions, and advertising spend. It's a very small amount of money. But we should assume corporations will move out of this particular formation quickly into this area, which is about 50% of the respondents in this sample base. So staff nearly doubles spending. Advertising spend balloons comparatively. And then you see agencies start to get a majority of the line item, 162K. Community software starts to uptick. It goes up 40K. And then brand monitoring is also a mainstay. So the mainstay recurring revenues from the software side is community platforms and brand monitoring are top 5 spends in the mid part of the bell shape of the graph. And the rest here is really around services, and then advertising. Okay, let's take a look at advanced companies to see where's the puck going to be. Staffing increases slightly, more people added. And then this is interesting, a lot of integration starts to happen. This comes out of nowhere. This wasn't on the top 5 on the other 2 segments. So custom technology development increases. And then boutique agencies emerge. So the Dotches Group and AnsiView that I was talking about earlier are taking down some big deal sizes, pushing traditional agencies off the top 5. So these companies get advanced. And then you see community and ad spending continue to stay up there. Okay, so that's part 2. That's where the money is going to be in 2011, and the forecast data, and that's all in front of you in the report. Now, I've given you a lot of information, so I want to distill it down into 5 recommendations for you on how I think this particular space will play out as an analyst. So the 5 growth opportunities. Then let's open it up to some Q&A. Now, again, to recap, this is a saturated market. There's 150 vendors in some of the categories. How will you spend? And we see that the community platforms, it's a stable area, but there's still a lot of particular platforms. This is a really confusing space. Now, the trick here is to remember, I want you to invest in companies that have multiple plays in the social business stack. That's why I showed you that, first of all. Anybody who has a single play is a trilobite. I don't think they will survive with only a point play. Because we saw that buyers are going to purchase the entire social business stack. Anybody who has multiple plays in the stack is more likely to be a long-term player. That's my call. So, number 1, find companies, vendors, that offer solutions to the enterprises. And that includes the services stack that we saw about. So majority of these vendors are on the software side, but enterprise buyers need services. Now that's hard for investors and VCs because we know services don't scale. I'm not saying it should be 80% of the portfolio, but maybe the company has 20 or 30% of their headcount focused on services. Services are absolutely required for an enterprise sell. There is no doubt about it. I work with buyers a lot. Most of the early stage software investment, these vendors, don't understand large corporations and don't apply services towards it at all. So you need to be careful how you hedge your bets. If it's just a software player, I do think that's a trilobite. Number 2, anybody who you invest in, make sure that they have an analytics platform that can help measure how effective the spend was in their particular services. In fact, we saw that as the number 1 requirement for internal goals for the buyer. They don't know how to measure this amorphous thing. I mean, think about it. If you're sending people to Facebook, how will you measure success? It's actually not easy because you can't deploy your own web analytics over there. You can only use whatever Facebook tells you. So any investment that you have, make sure that they can help measure whether it's revenue increase, customer satisfaction, advocacy. There's a host of ways you can measure, but make sure they understand that's a core component to the enterprise buyer. Number 3, I really believe that social media management systems are the emerging market in the software space. It just came out 10 months ago, and I see the market demand will be important for this space. This is a software system that will have recurring revenues, and as the social web continues to hockey stick, they will have a lock-in as companies use these tools, just like they have a lock-in with WMS and CMS systems 10 years ago. I see this replaying yet again. And Bob, you're very kind, but I'm a lot older than I look. Okay. So there's a variety of vendors, such as Spreadfast, Sprinklr, Xbeyond, CodeTweet, Hootsuite. I've seen 3 acquisitions in the last 10 months already by the email marketing platforms. They started to make these material events already. There's a full list of them. When you get this, it's on my blog. There's 28 vendors. I provided the list. You can just link to it, click to it, and it should open up. Number 4, Aggregation. We saw that website integration is the #1 go-to-market priority for 2011. Any of the vendors that help or services that help with integrating social media to the corporate website will be very key this year. And they should also receive recurring revenues through software licenses as well, and then the services on top of that. And then finally, number 5, this is to watch and understand carefully. This is an early market, but social CRM. So companies that are trying to glue these particular technologies together will be important. The market's not yet ripe this year for it, but this is to be on your watch list. This is looking further out. And just to remind you, these are companies that can take the social web, Facebook, Twitter, LinkedIn, and connect it to your existing customer databases, like Salesforce or IBM or Oracle or Microsoft, Dynamics, in order to predict what customers will do in store at the mobile devices, screens as you walk in, or even on the website. Imagine if all of these, wherever a customer arrives, they receive instant information that's relevant to them, even if they didn't log in. That's where this is headed, social CRM, predicting customers. But again, it's very early, so this is a place to watch. So I came here to tell you 3 things. Number 1, I wanted to organize your thinking around the social business stack. I wanted to whittle down thousands of vendors into the social business stack. So when you invest, you understand how they all work together. Number 2, I showed you, here's the stack, just to remind you. Number 2, I showed you the forecast data, and that 2011 is the year of integration. That's the theme for this year. And number 3, I gave you some recommendations on how to think about your investments. Again, focus on solution vendors that have multiple plays in the stack, not just point products. Enterprise buyer needs services as well. So if you want these slides, they will be distributed on the website, or you could just email. I'll have my team send it to you. My email address is jeremiah@altimetergroup.com. Or you can just email my assistant. She might respond faster, Julie@altimetergroup.com. And just so you understand, Altimeter Group, we are a research firm, an analyst firm. 3 out of 4 of the partners are from Forrester. They're the ones from Gartner and AMR, so we stem from a research background. We're located in San Mateo. If you work for a large corporation, chances are we might be working with you already with your analyst relations department and your research teams. So my final note to you is, before investing, make sure that you understand this changing ecosystem. There's a Cambrian explosion, but hopefully you have clarity today on how it's unfolding. Thank you very much. Okay, we can take some questions. We have just about a minute and a half. Right here. Your name, sir?
Hi, Andrew Gore from HI Network. Thanks very much. A fascinating presentation. I think it certainly helped me at the understanding. The one thing I can't quite get my head around, I can see the explosion that I can see some of the areas now, but in your numbers of how much is going to be spent by organizations, I think you gave a good example of Hyatt, for example, with all its brands, all its sites, and managing things like TripAdvisor and Facebook and stuff like that. But the numbers you put up in the advanced thing is maybe 2 people employing.
It's
the
tiny.
Advertising is less than 1 tele ad. Never mind Super Bowl stuff.
Yep.
How is that really going to pan out for a normal sized corporate that are represented in the room and that here?
It's so
because
early.
It's going to be so much.
So the
harder.
average team size is 3.2 people. And the average budget is 1.3 for these advanced corporations. But we're in year 2. And so what we're seeing right now is social media is primarily in the marketing organization. It's going to cascade next to support, product innovation, field, and supply chain. So it's very, very early. And if I come back to share next year, I'll say, oh, it's spreading to support. So it's very, very nascent within just a small part of the company.
Maybe to pick up with you over a coffee after, it'd be good to see what you think is going to be in 5 years' time for a reasonable size corp. What would the number in that column look like?
When we take our next measurement panel, then we will have ability to forecast a little bit further out. But I didn't want to forecast that deep this one. Thank you. Right over here.
Jeremiah, where does the value or threat of transparency
Into
the social business
Great.
ecosystem.
The question is around where does the threat of transparency fit into the ecosystem? I think that's a general trend that is occurring around the space. So transparency is one of the outcomes of social business. As a result, companies have no choice but to respond to negative comments that are happening out there. So they tend to be more transparent. And consumer woes can become mainstream media articles if they publish it on social media within hours. So this has forced companies to pay attention to the space and respond very quickly. So this is one of the outcomes of this particular space. So two outcomes. Corporations have to become transparent. Number two, they have to be authentic and address negative content as it occurs. And number three, they have to respond faster than they ever did. So in those investments we talked about, that's why brand monitoring was across most of the top 5 spending, because they have to monitor what's being said in real time. Great. I think we have time for maybe 2 more, right over here.
Just had one question on the brand monitoring. You just said, monitoring what people say. But in terms of, are they really monitoring text with current technologies, or are they actually monitoring what's said in video posts and things like that?
Right. So a majority of it is text-based sentiment analysis, or just text-based, just capturing what's being said. Some of the video, we're starting to see the encoding happening, like Google's trying to unwind what's being said, and often can use the crowd to do that, but a majority of this is text-based. A majority of the content being created on the social web is text for now, so it is suitable for what's being done right now. There's one more way in the back, if we could have somebody run back there.
Thanks for running back here. So my name's Tom Hawes. I work for the Blue Cross Blue Shield Corporate Venture Program. One of our challenges is we have multiple limited partners in different regions. And, because each Blue plan has their own state, their own region. How, as they do brand monitoring, I wonder, is it possible to tie location to some of the different modalities that are being used?
Yes, it is. So some of the metadata that appears if you upload a photo, this is both exciting and scary. But depending on your settings of what you've done with your phone, if you upload a photo, it could emit the time and the location that photo was taken. So if you see somebody taking a photo like on Newport Beach, and if you were smart enough, you could go back to your computer later in the day and figure out who was there and uploaded that photo at that particular time, and then figure out who they are and where they live. That's totally possible. A reporter actually figured that out. So the location data is starting to become standard metadata in social technologies. And the following social networks have applied location data. Facebook Places, Gowalla, Foursquare are location-based social networks. Twitter has location data, and Google Latitude is a location-based social network. So absolutely, location will be part of this story. Now, people are probably freaking out. Uh-oh, everybody's going to find out where I am and when I'm not home from work, and they're going to rob me. But there's an upside. So there's always trade-offs with these technologies. The upside is if you give more information, you get more context. And in theory, if we give more information, advertising goes away because we only receive contextual information that we want at the time. The downside is privacy. You give up some of your information in order to receive that context. So that's the trade-off. Take one more question, and then we're done. Right over here. The interesting thing about privacy is, though, is look at how our Generation Y treats privacy. It's a lot different than the way that I see the world as a Gen X.
How well established is your social network stack?
How well established? Can you give me more context, please?
So is it well known throughout the industry? Are there other changes potentially being made to that stack, some additions or changes in the kinds of functionality?
Okay, I initially published it and presented it at the VC event where Bob was in November in Sand Hill Road, and since then it has flown around the internet. IBM has contacted me and large software vendors, so it is spreading within the social business space. It's not on the Wall Street Journal yet, but maybe somebody can help me with that. So I'd stay within the ecosystem of social business. I'd say there is light to moderate penetration of the stack, but I certainly want to get the word out there. Thank you so much for having me.